Welcome to The Explainer. Today we're diving into one of the biggest financial decisions you'll ever make, choosing the right mortgage. I know it can feel overwhelming, but we're going to make it really simple. So, if you're staring at a few different loan offers and it all just looks like a confusing sea of numbers, you're definitely not alone. Each one's got different rates, different fees, different totals, and it's honestly tough to know which one is actually the best deal.
Okay, let's get right into it. We're going to give you a super simple but really powerful framework to compare these offers side by side, so you can walk away knowing for sure that you've saved a whole lot of money.
The key to getting out of this maze of numbers is a document you already have in your hands, the loan estimate form. Now, don't underestimate this piece of paper. Think of it as your secret decoder ring for the entire mortgage process.
All right, so let's start decoding this thing. Your loan estimate is jam-packed with numbers, but here's the secret. Only a few of them truly matter when you're comparing different offers. Just knowing where to look is half the battle.
You're going to see all of these on your estimate, but here's the thing. Not all of them are created equal. The real fundamental difference between any two offers comes down to the fees that the lender actually has control over.
And here's why that's so important. Things like property taxes and homeowners insurance, those are just estimates. The lender doesn't set those costs. One lender might guess a lower number to make their offer look more attractive, but you'll pay the same amount in taxes no matter who you pick. So you have to focus only on their direct fees, like the origination charges in Section A and any rebates, which they call lender credits, that you'll see down in Section J. So let's see how this actually works. Even if two loans have really similar interest rates, the costs controlled by the lender can be wildly different. In this case, when you subtract the lender credits from the origination charges, bam! Loan B is clearly $1,500 cheaper upfront. This is the kind of direct comparison that saves you real money.
Now, here's an insider tip that pretty much changes the entire game. Don't just look at the upfront costs. And please, don't look at the 30-year total. Most people just don't keep their mortgage that long. Let's calculate the real cost over a much more realistic period of time.
This is a fact. And this is exactly why looking beyond just the interest rate or that total monthly payment is so important if you want an accurate picture. Your cost over the first 5 years, that tells you the real story of the loan's expense.
And you know what the best part is? The loan estimate form does pretty much all the heavy lifting for you. Just flip to page 3, find that in 5 years section, you'll see two key numbers, how much you'll have paid in total and how much of that went to your principal. All you do is subtract that second number from the first.
And that number you get, that is your true apples-to-apples comparison point. It is the total amount of interest and fees you will have paid after 5 years. You do this simple calculation for each loan offer. The one with the lowest number is the better deal. It's really that easy.
Okay, so now you've got the data. You know which loan is actually cheaper and you can prove it. Let's talk about how this gives you some serious confidence and real negotiating power. Remember, getting multiple offers isn't just for your own peace of mind. Those other loan estimates, that's your #1 tool for negotiation. Nothing, and I mean nothing, speaks louder to a lender than a better offer in writing from their direct competitor.
So let's say you really like the loan officer from lender A, but lender B's offer is just plain cheaper. Don't just walk away. Go back to lender A, show them the better loan estimate, and just ask, hey, can you match these costs? You would be shocked how often they are willing to do it to win your business.
All right, finally, let's talk about a few common traps that can trip up even the savviest home buyers. A little bit of knowledge here is your best defense.
Be really wary of any loan that promises no closing costs. It sounds fantastic, I know, but it's not free. The lender simply charges you a higher interest rate, which means you end up paying for those costs, and probably then some, over the life of the loan.
And, always trust your gut. If the numbers on the official form don't line up with what the loan officer told you, ask why. If they can't give you a straight answer, or if you feel like you're being rushed, that might be a sign to just consider a different lender.
And that's it. You are now officially equipped to decode any loan offer, focus on the costs that really matter, calculate the true winner, and negotiate from a position of strength. The only question left is, how much are you going to save?